Hi, and welcome again to another edition of Market Analysis for today, June 13th of 2024. I am Giovanni Benacourt, analyst, trader, and educator with Vantage Markets, and this is being recorded previous to the open of the U.S. session. Well, traders seem to think they know more than the Federal Reserve about where interest rates are going. The reaction to the Fed's new forecast Wednesday seems puzzling. The dot plot, a sketch of how policymakers see the economy unfolding, showed fewer cuts than it did previously, and inflation ended the year higher than showed before. An interest rate reduction earlier than December looks like a long shot. Nevertheless, bond yields fell, implying lower rates in the longer term, and stocks surged to close at new record highs. That suggests investors are more confident than the Fed that inflation is still on track to return to the 2% target. That thought was encouraged by the better than expected consumer price index reading yesterday. Now, today's producer price index data make a more complete picture. Stocks rallied yesterday, then gave up some of those gains on Fed Jerome Powell's remarks, but still finished higher. The best theory to explain the moves is the idea of uncertainty. The future is rarely certain, of course, but there are times when it is more unpredictable than others. To be sure, uncertainty is lower now than it was when inflation was surging in 2022, and much less than when the economy was collapsing as the COVID-19 fallout took hold in 2020. But uncertainty is also higher than it was at the beginning of the year, as inflation has failed to slow as much as the Fed and others hoped. That's unsettling for the central bank, which, having been slow to starting raising rates, wants to play it safe. But the market seems to like a little uncertainty, since it makes things more volatile and thus presents more opportunities to make money. In short, traders see good times ahead, even if the Fed isn't making any promises about rate cuts. The rally still has legs, and strong ones, I may say. The S&P is up about positive 0.10%, and the Nasdaq is up about positive 0.63% this morning, as market participants wait slowing U.S. inflation against the Federal Reserve's more hawkish tone on interest rates. So this data of the PPI coming out later on today, and earnings report from software giant Adobe could perhaps take our so beloved Nasdaq to 20,000. Now, I'm being too optimistic and too bullish, but 20,000 is a psychological round number, and we are just basically 400 points away from it. So I did say at the beginning of the month that I'm contemplating, I'm saying that the S&P could reach 5,500 by the end of the month. I'm just going to throw in, we still have 15 days to the month. So 20,000 for the NASDAQ, is that far-fetched? Let's see, let's figure out. Stay tuned and watch it. So today we're also going to be seeing U.S. initial jobless claims data that is going to be coming out later on today. Now, the figure is to be about 225,000 compared to last week's number of 229,000 jobless claims. A much lower number, what would that mean? A much higher number, what would that mean? Hey, there's a homework for you. Now, in the bond market, the yield on the benchmark 10-year U.S. Treasury note is at 4.316, up a positive 0.54%. On the other side of the pond, Eurostock 50 are down negative 0.81% this morning after the Fed's projection for only one rate cut this year tempered enthusiasm following yesterday's softer U.S. inflation report. On the Asian markets, they were settling in red. China's Shanghai Composite closed down negative 0.28%, and Japan's Nikkei 225 stock index closed down negative 0.40%. Now, let's take a look at the market fluctuation on the Nasdaq yesterday, I had 19,330. That was being very conservative, and that was blown out of the water completely. Maybe I should have issued 19,400. But anyhow, we are in the overbought territory. Take a look. Overbought territory in the RSI for the Nasdaq. So 20,000. It is right there. You know, but let's see what will happen today. So I'm just gonna put my resistance at 19,900. No, at 19,800 first, because this is obviously, and I'm gonna clone this puppy, clone it, and look where it landed on 20,004. I'm just gonna try to see if I could get 20,004. All right, so that's my projections for today. I'm gonna bring up my support to 19,400. Okay, so that's gonna be the support for today. Let's see if there will be a pullback. Okay, a retracement that which already created a new high today. Pre-market, but let's see if that momentum will continue to the upside, reaching 18,804 initially, and let's see when we will reach 20,000. As far as for the S&P 500 goes, the S&P, the RSI is right on the borderline of entering overbought territory. 5,500 it is getting closer. Yesterday we almost reached it, so we were about 47 points away from it. We reached a high of 5,453. Ooh-wee. So today we're flattish, more into the red as we see. So I am going to bring up my resistance to 5,470. And I'm gonna bring up my support to yesterday's opening, which was my previous resistance as well. So, being optimistic, cautiously bullish. The Dow Jones, it is a completely different story. Yesterday, it did rebound off my resistance level that we had placed, and it quickly closed in the red. And today, since we have already violated that support, I'm going to have to bring that down. And I'm going to bring it down to a previous lower wick from Tuesday. So let's see if that, you know what? I'm just going to use a psychological round number. 38,404. But I don't know. That's not round. Yeah, 30,400 will be the case. But just not fight with it. So let's see. It's looking to is in a correction, is a pullback, a strong pullback. Let's see what will happen. Let's see if it will come down towards this and again just rebound and reverse from here. Crude oil. So crude oil yesterday almost. Well, not almost. It was far away, like 70 cents from reaching $80. Today it is on a downtrend. It did open with a gap down. So I am assuming that this is going to continue with this movement to the downside. So $76 and change is going to be that support, and I'm going to bring down my resistance to $79. All right, so I had said $80 by tomorrow. I may not reach that. Nat Gas. Okay, so Nat Gas is after hitting $3. It's just retracing. So 270 is the target. Let's see how much lower we will get. Gold. So gold yesterday, it didn't have that much of a move to the upside after the CPI number coming out, even though the dollar index just plummeted. But it didn't do that much, meaning there's a lot of resistance for gold to come back above or come back towards 2,400. And there's some sort of a selling pressure today. So let's see if today gold will just come down as far as it started trading on Monday. Okay, where previously on Friday we had that number, that non-farm payroll number, and it brought it down. So let's see if today will be that level. So I'm gonna bring my level of support to that lower wick. All right, so yeah, initially in the morning selling gold. Then we have silver that has already violated my level of support. So I'm gonna put it at 28.5, bringing down my resistance to yesterday's higher wick, making a tighter channel for silver. Stay not silver for now. Then copper. All right, so let's say copper is just making equal highs, equal lows so far. So that's a setup for a breakout. I am favoring a breakout to the upside. When? I don't know. Then we have Bitcoin. So Bitcoin. Yesterday had a nice fluctuation to the upside. It rebounded the 70,000 marker and retraced, very close in the green today. It had seemed to have done a little bit of a momentum to the upside, but in the morning. But now it's just in the red again, making another equal high, equal lows. Another setup for possible breakout. Just accumulation period. Then the euro. Yesterday, the euro, after that number came out and the dollar index plummeting, it did fluctuate strongly to the upside in parabolic movement, but it then retreated back and closed right at the resistance level where we at. Today, the market seems to be pushing even lower. So let's see if that 50-day moving average will help, as it has so far, apparently, as a dynamic support level, and then just bring it back up. So I'm gonna bring my resistance to the medium of the Bollinger Bands and just leave that puppy here. I am gonna bring my support to Tuesday's low fluctuation. Then we have the pound. So the pound really just kind of picked up the resistance level and then closed in the green today also. So let's also use the medium as a possible level of support and a reversal from there. And the dollar index is the one that yesterday took a plunge. Wow, boom, a dive towards the 104.90 and change. So it did recover some, but it's still in the red. Today is making that recovery. So again, let's use that 50-day moving average as now a dynamic resistance level. We'll see if it'll reverse and continue to move lower. It's right around 108, 105. That's it for me today. Have a great trading day, and I will see you tomorrow.